So I have AMD here, folks, loaded up in the stock research tool, currently sitting at $67.96. This company has been on a decline from the highs, the last 52-week highs of 164 and as low as 66.82. Now, here's the thing, folks, with AMD. I like this company a lot, and I'm looking to own shares of this business because I do believe it's a highly competitive company towards Intel and in the semiconductor space, but I don't like it at the current price, or sorry, rather, I didn't like it at the price where it was around this 160 mark. Now that it's come down and at least less than half, this gets me excited because I know how strong this business is, and it's evident here in the financial evaluations category of my software, which grades the cash flow statements, the income statements, as well as the balance sheets. We're scoring this company an 8 out of 10. The only points we're getting deducted is from the PE ratio being higher than 22.5 over the last 5 years on average, as well as the share dilution being increased by 36% over the last 5 years. Now, I'm going to be honest with you. I'll be honest with you. I can ignore the PE ratio to a certain extent. Now, the PE ratio is incredibly high with this business. Wall Street really likes this company. And with the huge price increase that we've seen over the last 5 years, pretty much dating back from 2016, we've seen this company go on the rise. It has been pretty high in comparison to the amount of earnings it's been bringing in. But now it's taking a step back. Now that price is falling down to what we hope might be fair valuations. Now, here's the thing, folks. I can ignore a PE ratio to a certain extent. 35 is a lot more, I guess, what's the proper word? Manageable than 76.20. However, the one thing that's a real kicker about this company is the amount of share dilution. 36% of shares have been increased over the last 5 years. That is a massive amount of increase in share dilution, and we don't want that. We want companies buying back shares, or at the very least keeping share counts the same. Now, in that regard, AMD is doing a lot of things right, and let's just go back to this chart here. They have a high current ratio. That means they have a lot of assets on hand to cover their liabilities. Their ROE is astronomically high, 23%. That's pretty good. We want this over 15%, and it's well above that. EPS growth is up over the last 5 years, and they have an extremely low debt to equity. Now, here's the thing, folks. What I've noticed, typically when you have a company with a low debt to equity, meaning that they're leveraging capital through equity and not through debt, you usually find share dilution to be up. So here's the weighing game. You want to have debt to equity ideally underneath 50%, and your share dilution obviously, well, close to zero, if not in the negatives. So yes, they'd have not that much debt. However, they are diluting you, the shareholder. Now, on the other side, our net income is up, our free cash flow is up, return on invested capital is high, and our revenue is also up. So green across the board, except for these two major tickers right here. Now, what does that scream to me as a potential investor? Well, do I like sharing my profits with other investors? No, to be honest, I'm greedy. I want the profits all to myself. So I don't like that they've been diluting me. However, I do see the potential growth of this company, and it's evident here. Look at the company metrics, guys. So here in this category, you can kind of contrast and compare what the company's doing from a 5-year average standpoint to the trailing 12 months, what it's currently doing. Free cash flow is sitting at $3.3 billion. On average, our free cash flow is $819 million. So one's with a B, one is with an M. So they have been crushing it. Profit margin is also up. Our EPS is up as we expressed. And they have a very high Almond Z-score and not so great Piotrowski score. So they've been making improvements. They've been making improvements in their free cash flow, which is super important because that is literally the blood of the company. So with that being said, I am obviously a fan of AMD, and me seeing that this price has been decreasing gets me excited. What we're going to do, folks, is we're going to jump into the price analysis section, and we're going to find the intrinsic value of AMD and what we should be paying for it today. So stand by while I fill out these boxes. If you're a fan of this video so far, hit that like button, hit the subscribe button down below over here. It means a lot to me, means a lot to the channel. So jumping in, and what we'll show you here is that this is what happens, folks. So with the price analysis section here, I'm upping the revenue on a 10-year analysis, 10, 12, and 14% to try to be as conservative as decently conservative as possible. Look, it is a $109 billion company, so I believe we can possibly grow that much in the next 10 years, considering how we are moving forward in the semiconductor space. That's what I'm really banking on. So with 10%, 12, and 14%, I kept everything roughly the same in terms of profit margin and free cash flow margin, because I believe they can do that over the next 10 years, as well as I kept pretty moderate numbers for our price to free cash flow and PE ratio. Clicking the calculate button, we're going to find out what we should be paying for this company today. So the software is going to run through all these lovely numbers and spit out what we should be paying for this. So I'm very curious. The anticipation is killing me. And this software, folks, I'm trying to get this out to you as quickly as possible. You'll find out a release date and it'll be available to you as soon as can be. And it's not looking too hot for AMD. Currently, average calculation comes out to 29.48. Now you may say, Leo, if you're anticipating this company to be growing quickly and astronomically high, why are you putting such conservative growth rates? Why are you putting such lower growth rates, considering that they have done 32% over the last 5 years and they've done 16% over the last 10 years, and in the last 1 year, pretty much 68% of revenue growth has been going up? Well, here's my reasoning, folks. I like to try to stay as conservative as possible to try to anticipate the absolute worst. So now that I've found what my average calculation comes to be as pretty much half of what the company's currently worth, I could try to see where this might make sense. And if I feel like I'm really pushing the envelope, because essentially this is my margin of safety, folks. The revenue growth and our desired return obviously is how much margin of safety I want to take on this business. Now, I could be more aggressive with it. I could double it and go 20, 22, and 24, or rather add 10 to everything and see what happens with the revenue growth numbers. And it may turn up to be a buy. But ideally, I want to try to find that sweet zone, and there it is. Take a look at that. At 24% revenue growth and 22% revenue growth, we're pretty much trading at fair value. Now, do I believe that this company is currently or is able to do 22 and 24% revenue growth over the next 10 years? I can't say that is highly plausible. I can't say that at all. And it'd be foolish of me to agree with that. So, let's say if I go and I split the difference and I do 15-ish, 17, and 19, we might find some numbers here that might work for us. But however, I'm banking on maybe this 10% revenue growth number. So here, let's take a look at this. Pretty much, here's the Goldilocks numbers. I think that probably makes the most amount of sense for most investors, and not be as conservative as possible like I was previously. 15% revenue growth, 17 and 19. That comes out to be 46 on average compared to our current price of 67. So what does that mean? That means, to me personally, AMD is still an overvalued company. And until it drops down to these 40 levels and south of 60 at least, then it's something to take a look at. Now, as I said, we want to have the most margin of safety because, look, I can be wrong. There's other competitors in this space, and you don't know what the future brings, right? There's NVIDIA, there's Intel, there's Qualcomm, there's all these other phenomenal companies that are making all these great chips. And do I believe that AMD is probably going to be at the forefront of all this? Yes, potentially. Like, full disclosure, I'm an Intel investor, but I want to be able to invest into AMD. I want to have all these top companies. However, even though they're making phenomenal money, they're making phenomenal revenue, and they're making phenomenal moves in the market, what is the price I am willing to pay for this company? That is the major question, and that's what I'm really trying to educate on this channel. Is just because something's great doesn't mean you should overpay for it. Our goal is to find something at a bargain price, and that's what I'm trying to find here with AMD. Now, if you agree with me, write something down in the comments, or if you disagree with me, which some of you do, or some of you might, write down what you would put down as your revenue growth numbers for this company like this. And eventually, when you have this software in front of you, you can fiddle around with the numbers as much as you want. We're moments away of dropping this software, and I know I keep talking about it every single week and every single video. There's a lot of headaches that goes into getting something out, because I want to make sure you guys have the best experience with this, as well as everything slated for more features along the way. So with that being said, folks, if you liked the video, drop a comment down below, drop a like, hit the subscribe button, and let me know what company you want to see evaluated, and I will get to it as soon as I can. Thank you so much for watching. Until next time.